Mike and Tom are registered with Stewart Partners Global Advisory LLC.
Common Sense Finance with Mike Wigginton and Tom Farrell of H.L. Wigginton Capital Management, an independent investment and financial planning firm in downtown Jasper. Mike is a chartered financial analyst charter holder, and Tom is a certified financial planner professional. They are here to discuss and give their thoughts on current financial and economic matters. Now, with Common Sense Finance, here are Mike and Tom.
Hey everybody, welcome back to another edition of Common Sense Finance. This is Tom Farrell, I'm Mike Wigginton. And so today's going to be another installment in the Tom Farrell interviews, because this is a listing of ideas that Tom has generated, kind of like the serial killer interviews on Netflix, and really doesn't look like...
A lot of similarities.
There are a lot of similarities, and you know, you'd never think, but looking at him, he'd have some ideas, but actually he does. He has some good ideas. And so what generated this one was an article, I think it was on Market Watch, is that right? About, because we had this recent market volatility, so it was about, investing through market volatility, what should you do? And it was specifically aimed at people that were just thinking about retiring right now, or perhaps they just recently retired and now the market's off 10, 15, 20% or more on you, okay? And so what should you do about this? Quite frankly, this is an age-old conversation that you've been having with folks.
Yeah, and you said it. It's more, especially people that are getting close to retirement or already retired, are obviously going to be more sensitive to this. You know, the younger, your 20s, 30s, even in your 40s, you know, the market volatility comes up. You've got plenty of time to recover. If you're about to retire and you're going to be heavily or somewhat dependent on your investments, your 401k, your brokerage account, whatever, to provide some sort of standard of living for you, then it can be more worrisome to see market volatility. But this article is talking about some things, some general rules of thumb that you can do in volatile markets. Don't necessarily agree with all of them, because we're in a little bit different situation this time, where interest rates are rising, so putting a portion of your money in bonds may not be the most prudent thing to do right now, because one of the rules of thumb is, and you may have heard this, when you get to be 60 years old, you should have 60% of your assets in bonds or some kind of fixed income, and then 40% in stocks. Well, that's probably not going to, or it hasn't worked out real well for you in the last few years, and it probably, unless something changes, it may not work out very well going forward for the foreseeable future. So a couple of things we wanted to hit on for those folks that may be thinking about things like this. So the first thing, if you're about to retire and you're about to start drawing on your investments, your whether it's a retirement account or a regular brokerage account, you need to have, and depending on your situation and your sources of income, you may need to have 18 to 24 months worth of cash on hand. When I say cash, you can use that money to live for the next couple of years. So that's one of the main things. So if you have that, you should be able to withstand most, if not all, any type of market pullback, recession. That should be able to get you through it. You're not having to pull money out of your account when some of your investments may be down. So that's the number one thing that we recommend. The second thing is, obviously you need to look at what kind of investments you have. If if you've had some investments that are more volatile, the higher valuation, maybe some companies that in the technology space or other spaces that you're going to see very large swings up and down, those may not be appropriate investments for you if this is money that you're going to need in the next few years. So those are a couple of things to take a look at when you're sitting there looking at the markets going down. Well, here we are, what is it, June 3rd, and the S&P 500 is off 14%, give or take. At least it was the last time I looked at it this morning. So this is a time where people really start to be concerned about how their investments are allocated, what their future is going to look like. So it's definitely not the time to panic.
But anybody that's listened to or watched these podcasts for very long have seen or heard you address that on a number of occasions and it's called sequence of return risk, that you get, as soon as you retire, you start getting these terrible market returns, and so the way to protect against that was simply the cash buckets. And so this is probably for some folks old news. It's just a redundant, but it's something that obviously they're writing articles about. So
Yeah, it's timely. People are looking for things like this now. So anyway, that's all for that. Unless you have something else.
we'll leave that with the last word.
All right.
Thanks.
Just can't believe all the things people say. Controversy. Am I black or white? Am I straight or gay? Controversy. Do I believe God? Do I believe me? Controversy. 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 I can't understand human curiosity. Controversy. Was it good for you?